I'm Larry Walther. This is principlesofaccounting.com, Chapter 11. In this module, we will look at the accounting for intangible assets. Intangibles are assets that lack physical existence but still contribute significantly to the earnings capacity of a company. They include such things as patents, copyrights, trademarks, even a company's brands, franchises, things of that nature. A company may develop these intangibles through their internal business processes, or they may acquire them externally. Globally, the internally developed intangibles, in some cases these are recognized where there's clear and measurable benefits to the company. The USA approach, however, is more limiting. Self-created internal intangibles are seldom recognized on the balance sheet. Intangible assets, when purchased, are recorded on the balance sheet at their cost. Recall there's even a separate category on a classified balance sheet for intangible assets. The intangible assets cost should be amortized over its useful life. We'll talk more in a few minutes about how we would determine the appropriate useful life. But bear in mind that amortization is simply allocating the cost over the useful life. In other words, amortization is to an intangible as depreciation is to property, plant, and equipment. Some intangibles may have an indefinite economic life. These would not be amortized, but they would be periodically evaluated for impairment. Let's look at an example of amortization. Mercury Pharmaceutical purchased a patent for $50,000 and estimated its useful life to be 5 years. Initially, we debit patent for $50,000 to reflect the cash paid to purchase the asset. Subsequently, at the end of each year for 5 years, you see I'm debiting amortization expense and crediting the patent. Notice I'm crediting the patent directly. There's usually not an accumulated amortization account for intangibles like there is accumulated depreciation for property, plant, and equipment. Here's an example of an impairment. First, a music download service, Inc. purchased an internet domain name for $50,000 and estimated that asset to have an indefinite life. The domain name would be recorded at its initial cost, and that $50,000 intangible asset, the domain name in that case, is not being amortized. However, perhaps after a periodic review at some subsequent date, we determine that that asset is no longer valuable to the company. Maybe its value is now no more than $20,000. This would require an entry to impair that cost. So notice that I'm crediting the domain name $30,000 and just debiting a loss to record the decline in value of that particular asset. Let's look at some specific intangibles. For example, patents. Patents give their owners exclusive rights to the use or manufacture of a particular product. Depending on the country, the life may vary, but in general, around 20 years is the life that is allowed for a patent, its legal life. Now, some items may have that long of a legal life, but their economic life may be much shorter than that. Some particular new technological innovation that may last 3 to 5 years could be protected longer than that, but produce economic benefits for only that 3 to 5 year period, in which case we would amortize the cost over the shorter economic life. The amount included in the patent account includes the cost of the purchased patent and or any incidental cost related to the registration and protection of that patent. Another type of intangible would be a copyright. These provide their owners with the exclusive right to produce or sell an artistic or published work. Copyright normally has a legal life equal to the life of the creator plus an additional 70 years, although the economic life is usually shorter. The economic life is the period of time over which the cost of a copyright should be amortized. Franchises give their owners the right to manufacture or sell certain products or perform certain services on an exclusive or semi-exclusive basis. The cost of a franchise can be reported as an intangible asset and should be amortized over its estimated useful life. Trademarks, brands, internet domain names generally have fairly short legal lives but can be renewed indefinitely, and as such they're viewed as having an indefinite life. So a trademark, for example, might need to be renewed every 10 years, but there's no risk of not being able to renew an established trademark, and so you would view it as having an indefinite life. You would not amortize its cost. Finally, let's close by looking at goodwill. Goodwill is a unique intangible asset that arises in the course of business acquisitions. We saw this in a previous chapter, in fact. It reflects the excess of the cost of the acquired entity over the net amount assigned to the identifiable assets and liabilities of the acquired company. This excess may be paid because of a company's outstanding management, earnings record, other features, customer list, favorable business environment or location, things of that nature. Goodwill is considered to be an indefinite lived asset, so we do not amortize its cost periodically, but we're required to evaluate, at least annually, required to evaluate goodwill for impairment.